Hello, it's Robert Miner with Dynamic Traders Group with our Saturday, August 11th DT Reports, a video update excerpt for YouTube subscribers. This is just a small portion of the video update that we do for our subscribers, which is typically about 20 to 30 minutes long each Saturday. And of course, we do another video update on Wednesdays, as well as trade strategy videos to ongoing education with specific trade strategies for the weeks ahead. So I'm going to focus today's YouTube video on the stock indexes because, as I had in the report, on the cover of the report, I put the immediate markets that have the best potential for immediate trade strategies, and the stock indexes were one of those. So we'll go over in a little bit of detail about the S&P. Well, this is the S&P weekly chart, and we don't want to lose sight of the big picture. And the big picture is, and the most important technical factor is the pattern coming up off of the February low. And this is textbook corrective pattern. It's certainly more complex than any simple ABC pattern would be. And as of the middle of June, this was really an ideal spot to have completed an ABC flat correction. However, it continued higher, so this is part of a complex correction we just never lost sight of, even though we've had weekly bullish trends that lasted a few weeks after these 2 to 3 week corrections, is that this whole corrective pattern should complete without having exceeded the January 2018 high. Part of that reason is all what we call the overlaps, or it's the overlap guideline that I have, and that let's take it from this April low is a section up, correction, and then a continuation to a new high, and then a correction well into the range of this other section. So it overlapped that range, and that's not typical of an impulsive trend. It's typical of some sort of correction. Then again, we went to a new high, and we came back again and traded well into the range of the prior upswing. Again, another overlap, and then we have traded to a new high. So the interesting thing at this particular point in time is that we made a weekly momentum bear reversal this past week on this key reversal week, and we made it below the January 2018 high, which should be the extreme of any correction. So we're at extremes, and at the very least, we've probably completed a weekly high, and that would be followed by 3 to 5 weeks sideways to down in the stock indexes. But because of the unique and extreme position and this pattern coming up, the odds are this could be a multi-month high that just concluded last week. Let's take a look at the daily data. And here's the daily data up from what's most important is up from this April low. And again, we have all these advances that were overlaps. And a key factor here is from the late June low is we have just completed, or probably just completed, just a textbook 5-wave advance right into the end of wave 5 price target zone. And that's really significant. So it's not only the end of wave 5 target on this 5-wave advance up from June, it's also a higher time frame extreme target, which is the 162% external retracement of the last decline. That's the mid-June to later June decline, just a few points away from the top. Then what also happened last week, and what I had in our Wednesday report, is a trade below Tuesday's low with a lower daily close would reverse the trend to bearish, reverse the daily trend to bearish, and because the weekly momentums at that time were overbought, it would probably coincide with a weekly high. So not only did we have significant price at last week's high, not only have we had a weekly momentum bear reversal, which is typical at weekly highs, and it was made from the overbought zone, but we had daily momentum bear reversal. So it's dual time frame momentum reversal. Here's the ES, the September contract weekly data, and I'm showing this because we have some higher time frame price relationships right where the high was last week, as well as time relationships. These price relationships were 100% alternate price projection of the prior advances, And so we have two of them within a few points of each other, and so far, at least last week's high was right in the midst of those, and there again is that 162% external retracement of the last decline, typically the maximum for the final section in a trend or a counter trend. Also last week were two key weekly time factors that we noted in our reports a week or two ago, and which should be the maximum on the upside on a weekly basis. And that is, we had just a simple high to high to high, week ending August 10th, and then we had a simple alternate time projection of the May low and to the June high, projected from the late June low, and that again was the week ending August 10th. So we make our time and price projections in advance, and if a market reaches those extremes and we get then a higher time frame or a dual time frame momentum reversal, that's the synergy of all aspects of the technical factors that we're looking at, and this was textbook with our key reversal day on our key reversal week last week, and our daily momentums making a bear reversal and then the close below the last minor swing low to complete 1, 2, 3, 4, 5. So what's really significant, both the other stock indexes we follow, the Nasdaq and the Dow, are in a similar position. A little different pattern position, particularly for the Nasdaq, which has a clean, ideal 5-wave advance to a new high from the April low, right into the end of wave 5 price target zone. And it's made its weekly momentum bear reversals and daily momentum bear reversals as well. So all the indexes are in a key position to continue sideways to down at a minimum for 3 to 5 weeks and potentially for several months. And the beauty of this is, what if we're wrong, or what if I'm wrong? The stop on any short position, bear ETF, however you tend to want to take advantage of this information, is just above Thursday's high. So like we're very near a really high probability trend, a bear trend for the next 3 to 5 weeks. And if incorrect, the stop out that will tell us that we're wrong is just above Tuesday's high. So what a fantastic opportunity to initiate short trades at the first of the week. So let me show you one other thing. I'll go down to the 60-minute data. And this is what's very important for those considering a short position. Is the first thing we ask if we want to be short is, well, if we go short, where does the stop? And the stop can be based on various technical factors. I typically, one of the most frequent factors I look at is pattern. So if off of the high, this is the recent high on August 7th, and if this is a 1 and a corrective wave 2, and if this is either a completed wave 3 or it might be a wave 3 that's still underway, the whole point is, one way or another, it's a wave 3. If that is the case, where should the ES not go if the trend indeed is bearish? And if indeed this is making a wave 3, which may have been complete on Friday? Well, one of the Elliott wave rules is a wave 4 should not trade into the range of the wave 1. So here's the wave 1 low, 2852.50. So wherever we might enter short, our stop would be no more than just a couple, 3 ticks, and I would do it at least, I usually do it 5 ticks above whatever the price level is, or the pattern level is, above 2852.50. So ideally is that come Monday morning when there's active trading, is the ES is trading in this 38 to 50% retracement zone, which is typical for a wave 4 correction. If this is a wave 3, that would be the ideal. And that would be a position then on an intraday momentum bearish reversal to enter short with a stop quite close to the market. And well-defined definitive stop, the point where we no longer would want to be short, not far above where we closed on Friday. So Monday, one way or another, there's going to be a setup to enter on the short side with a stop no further than 28.52. I would put it at 28.53.75 myself, a point or so above, a few ticks above, for a possible bit of an overlap, which happens intraday sometimes, specifically in the futures markets. And then if I'm going to say when short on Monday, should the S&P or the ES then continue to a new low, is that we'll probably be able to identify a swing high that should not be exceeded if the trend is going to continue bearish, which will be closer to the market. So that's the broad trade strategy for Monday. And of course, in our trade strategy video tutorial, we went into some more details and a couple more what ifs and for entry strategy and stop strategy, etc. But I think you get the gist of this. Stock indexes are just in a beautiful, beautiful position for short position with very minimal capital exposure. Here's our Nasdaq Weekly, and again, from the April low, this is just 1, 2, 3, 4, 5. The ideal textbook wave 5, where 5 subdivided into 5. Again, ideal textbook pattern analysis right into the broad range for the end of wave 5. That's a pretty broad range, but on the daily data we narrowed it down to a much more narrow range. And again, weekly momentum's made a bear reversal on a price momentum bearish divergence where we had a price high and we had a new price high up here, but the momentum was below. So that's called a price momentum bearish divergence. Real typical at the end of a trend in an Elliott wave terms in a wave 5. So here's our YM, and coming up from the June low, again, almost ideal, 1, 2, 3, 4, and then a 5, and of course the YM also has closed below last Tuesday's low, which indicates that the wave 5 is complete. And it fell just a little bit short of the ideal end of wave, beginning of the wave 5 target zone, which was the 127% external retracement of wave 4. So that's what we're looking at for early next week. For those of you who have not subscribed to our YouTube channel, why don't you do that? Almost every week on Saturday we put up a video tutorial and analysis of at least one market for the upcoming week. Not nearly as comprehensive as what we have in our for regular DT Report subscribers, but I think you'll find them very helpful. And also what I always do is I explain why I believe the market's in the position it is. I explain all the technical factors, whether it's time, price, pattern, and dual time frame momentum. So it's educational as well as an alert to markets to look for specific trade strategies. And feel free to let your friends and neighbors know about our YouTube videos so they can subscribe also and take advantage of this information. And of course, if you like what you hear, check out our DT reports at dynamictraders.com. That's it for this Saturday in our YouTube video. Take care, and we'll be back with you for sure by next Saturday.